Okay, how to file your taxes as an LLC owner. Let's discuss it. Now, in order to do this, we have to break this video down into two sections because you have the single member LLC and then you have the multi-member LLC. And although they are both limited liability companies or LLCs, the tax returns are prepared and filed a little bit differently. And I want to make sure that you are filing your taxes correctly in 2022. So today I'll be going over what tax returns you need to file as an LLC owner, what you need to record and what you need to put in your tax return, how to pay your current and future taxes, and any tips and FAQs along the way so you stay out of trouble with the IRS. So if all that sounds good to you, make sure you like this video while the intro plays. Hey there and welcome to our channel. I'm Sean with Life Accounting, the accounting firm that is dedicated to helping you save on taxes and building more wealth. And also, I want to say thank you to everyone who has been subscribing and joining our channel. We really appreciate the support and it gives us the positive reinforcement to continue making YouTube videos. All right, so step number one, what tax return do you need to file as an LLC owner? Well, as I mentioned, it depends on what type of LLC you have. Let's go over all three. So you have a single member LLC, which means you are the sole owner of your limited liability company and you have no partners. That means you will need to file your taxes using Form Schedule C and Schedule SE, and that can be found on the US 1040, the individual income tax return. Now, the Schedule C portion is used to report the income and expenses you incurred as a part of your business. Schedule SE is also required to be included with your tax return as a single member LLC because it is used to calculate your self-employment tax liability. And Schedule SE stands for self-employment. Now, I'll break down exactly what goes on in Schedule C in just a second, but before we do, let's talk about the multi-member LLC. Now, if you have a multi-member LLC, that means you have at least one other partner in your business. So there are at least two LLC members. If that's you, then what you guys need to do is file US Form 1065, the Partnership Return of Income. Okay, this form allows you to clearly allocate the portion of income and losses to each partner. Hey Sean, look, I can split my profits with myself. Okay, kind of like that. Now, this form must be filed by the business tax deadline, which is usually March 15th. Now, there are about 3 pages on the 1065 form, which covers all your income and expenses as well. Now, lastly, if you have an LLC, regardless of if it is a single member LLC or a multi-member LLC, and you have elected to be taxed as an S corporation, which, by the way, being taxed as an S corporation allows you to eliminate some of the self-employment tax, which is great for businesses who are making at least $70,000 in net income. Anyway, LLCs who have been elected to be taxed as an S corporation need to file US Form 1120S, the income return for S corporations. And this form mainly ensures that owner employees are paying themselves a reasonable salary and calculate the distributions earned from the company. This tax return also must be filed by the business tax deadline, which is usually March 15th. Now, LLC partnerships and S corporations still need to file a normal 1040 form for their individual tax purposes as well. All right, so now that you know which tax forms you need to file, let's move into number 2, what you need to record on your tax return. Now, the tax code and the IRS are very simple, okay? They want to know who you are and they want to know, with integrity might I add, how much money you made and what percentage of that should be allocated towards your taxes. And that's the case for every business regardless of which tax return you need to file. Which, by the way, if you need professional assistance with tax planning and tax preparation, then consider working with our team. There will be a link in the description below where you can sign up for more information. So the next step, step number 2 for every LLC owner is to record information about you and your business on your tax return. You're gonna need to record stuff like your business name, your business address, your business EIN number, your principal business or profession, like what you sell, your principal business code or activity code, your accounting method, if you materially participated in the operations of the business, if you just started or acquired the business, and if you needed to file any 1099 forms, as well as any other important information about your business. The IRS will ask you additional questions so they know everything there is to know. After that, then you can move into step number 3 and look at the next section on the Schedule C, General Partnership Form, and 1120S tax form, which is income reporting. In this section, the IRS wants to figure out what your gross income was for your business. Now, you may receive one or multiple 1099 miscellaneous forms or 1099 NEC forms to report exactly how much income you made. And if you had a lot of online sales, then you may also receive a 1099K form to report your income with as well. Hey Sean, look, I'm reporting all my income forms. Okay, kind of like that. Now, once you have all your income reported, then it's time to move on to step number 3, record your qualified business expenses. Now, most platforms and companies make it pretty easy to find out what your gross income was for the year, but expenses, well, not so much. Okay, it's up to you to make sure you are tracking or bookkeeping all your expenses throughout the tax year. Now, once you have all your expenses and transactions categorized and organized, then you can move on to step number 4 and start recording your expenses on your tax return. Okay, you're going to want to record any asset purchases that you made throughout the tax year, any direct qualified expenses that you spent money on, such as advertising fees, meals, employee benefits, etc. And if you had cost of goods sold, then you want to make sure you complete that section as well as any vehicle expenses you may have incurred as well. Now, once you have listed all your qualified expenses or tax deductions or tax write-offs, then you will arrive at your net income, which will determine your total taxable income, what tax bracket you fall into, and what taxes you need to pay if you haven't already done so. And all of that is calculated pretty quickly when you file on the 1040 form with a Schedule C. After that, then you can move into step number 5, which is to go ahead and record any other individual activity on your tax return and then file your taxes. However, if you completed step number 4 within a 1065 partnership tax return or an 1120S tax return, then step number 5 is for you to obtain your K1 document. Okay, this K1 document is used to distribute each partnership's share of current income, deductions, credits, and other special items on their tax return. So basically, you need to file your 1065 or your 1120S again by the business tax deadline, which is usually March 15th, and then file your K1 document on your individual 1040 tax return. And if you are an S corporation paying yourself a reasonable salary, then that would include your W-2 income to be filed on your individual tax return as well. Okay, step number 6 is to pay your taxes. So if you happen to owe taxes at the end of the tax year, then most tax software will show you exactly what you owe and even create a payment plan. Now, the easiest way to make these payments is to go to irs.gov/payments/direct pay and make a payment. If you are not able to look up your payment yet, then chances are your tax return may still be processing. Now, going forward, if you expect to owe more than $1,000 in self-employment taxes, then the IRS requires you to pay quarterly estimated tax payments. Quarterly estimated tax payments are basically tax payments made at the end of every quarter during the year to ensure you pay your taxes to the IRS on time before you file your return. Otherwise, you could be hit with an estimated tax penalty. But as long as you pay at least 110% of your prior year's tax, the IRS cannot charge any penalties or interest for underpayment. Now, I know that was a lot of information, but I hope it made sense. If not, remember, you can work with us on tax planning and tax preparation. Just look for the link somewhere in the description below. Now, coming up next, we have some more great tax videos, tax write-offs, and more. So make sure you check those videos out, and I'll see you over there.